Hey there, everyone. Morning. Happy Friday, 17th of April, 2026. It's the NBC Markets Morning Call. I'm Mark Gardner. Stocks are pretty flat overnight after what's been an extraordinarily unexpected, solid week, back to record highs. And then it basically just stagnated around there at the moment. And with US earnings kind of coming into, we'll start to get into the decent swing of it next week. You probably expect the market to linger a little bit here. There has a tendency to not make any major moves to the downside, overall during that period as everyone sort of waits on the earnings results. Netflix had a really poor result. Had a good result, but a poor outlook, and their chairman stepping away. So whilst they beat EPS or top and bottom lines, EPS and Rev, their stock's down nearly 10% in after-hours trade. So, I mean, look, I think that's going to be a bit of a, an overall trend over the course of the earnings, over earnings, because we are back at record highs. You're going to have to be solid on outlook, and you're going to have to solidly beat because we're at record highs. So there's not much room for error. So everyone probably be very mindful of that. And then, of course, you've got this thing lingering in the background, that whole, Iran-US conflict thing. Trump's just perfectly keeping up. He's almost measured and very much timed. So someone from his administration or him make pretty much a regular announcement around peace or coming to a deal or something progressing round about every 4-ish hours. So he's a master of the media. He's keeping up that steady flow of positive news. And with the old philosophy, if you say it enough times, then it must be true. And markets are falling for it. So yeah, look, there are still attacks going on. With another 30 overnight. There was 30 the previous day. The US and Israel, there's attacks going on there as well. We're now at 46 days to normal supply. If there was a peace deal like tomorrow or today, as you can see here, there's no up in the top right corner there, just in case you can't see the pointer. There's no traffic going through. So at the end of the day, whether there's a peace deal or not's irrelevant. And this is going to sound really harsh to say, the end consumer and people, at the end of supply chains, that vote, basically they care if the Strait gets reopened. I don't really think that Trump was elected on a platform of we're sick of hearing about other people's wars. Probably from an Australian standpoint as well, we're just, him causing trouble in a part of the world that he didn't necessarily need to get involved with is affecting our lives. We just like it all to be, everyone just like it all to be over. Essentially, I think it's human nature to kind of switch off a little bit if it's out of your control. You sort of have that tendency to believe the news if it's said and over enough times. So, we're really starting to clock up some big numbers now in terms of how much it's going to cost the consumer. The troop movements this week have just gone through the roof as well. So, a lot's been said about progress on this deal, but realistically, Iran's still blockading. There's threats to close the Red Sea as well if this thing escalates. Trump's done his own blockade, then claimed he solved the problem and unblockaded. But the bottom line is the attacks are down a little bit, and they're I wouldn't call it a ceasefire. It was more of a reduction in firing at each other. But what matters for the economy, no matter what side of the fence you sit on here, no oil's getting through, and people are running out, and that's going to push prices higher. It's going to dent economic growth and hurt inflation, and that's not good for markets overall. So yeah, whatever, the facts are the facts. Whatever Kool-Aid you want to drink is up to you. But the bottom line is keeping that days to normal traffic through Hormuz thing. Numbers are basically what matters in the real world in the end. As I say, very unconvincing evening. We had AMD Intel, Cisco, and these guys head up. Texas Instruments, Oracle. So bit of a bit of buzz around data center, I suppose. As I say, Netflix dropped 10% or thereabouts after the close. Didn't really have much of a move overall. Like crude's around the 93, was up around 95 area, but really being held down by that constant stream and that news flow of. So I mean, look, excuse me. Trump's doing a good job, keeping a lid on it at the moment. Which could be a good thing if they get a result quickly, but it'll be a bad thing in the long run because people will be lulled into a false sense of security and be unprepared. So, look, things look really strong in terms of the technicals at the moment. We've rallied back 4 or 5% this week. I personally, this reeks of 2022 when we had a similar situation in Russia, Ukraine, where we created after the invasion, and we had one of the best fake out rallies in history before we went into a technical bear market into June. You won't catch me. Apart from earnings season plays, and being a little bit patient to go and buy the dip later on. Nothing on our table at the moment. To our clients, I'm still alive, but until we get some clarity around the actual situation, I'm not gonna feed you. I'm not going to feed you the Kool-Aid of this thing's over and it's all safe to go back in the water at record highs, because that's just absolutely irresponsible. Lithium, the big winner this week, and uranium. I thought was always going to happen anyway. And I think that locking down these supply chains, lithium key for renewables, uranium key for nuclear power, electricity cost and cost of living costs are by far and away the highest polling issues for Americans into the midterms. So I think that there'd be very high on the list, those critical minerals for the next any sort of next dip. I mean, crude's only down 2% for the week now, and look, gold, silver, platinum just drifting higher. But yet again, it's not really. We're sort of long oil is a bit of a hedge here at the moment, and we're sitting on our hands and cash and being patient. And like in light of that, basically we're sort of producing some structured investments from a baseline level to in the meantime while we sit around and be patient. So I've created like the conflict tracker. I've created a little tracker for private credit, which I'll just bring up every time we need to really address it. We're at DEFCON 3 at the moment. Systemic is number 1. Which is so we're about halfway there at the moment. There's about 100. It was something around the lines of 180 billion of direct exposure from the banks, and then these are the redemption requests. So this is around about where that green line ends. Bar chart ends there. That's the redemption cap. So anything above that to the right hand side is redemptions in waiting. And what a redemption is people want to pull their money out, and they have been very smart in trying to get ahead of that in terms of stopping like what equivalent of a bank run, which is a bit of a disaster for these things. So there is a chance that they may be able to manage their way out of this as an industry, but it's on pretty tender hooks. So yeah, as I said, we got that valuation alert happening at the moment. There's at least a 10% correction more than sort of 70% of the time when we've got all of these overvaluation signals pressing. Particularly in a midterm election cycle, you're more likely looking at a 16 to 20% downturn and then a really sharp bounce out of the bottom, which is what brings me to we've got a strategy at the moment which we've developed, and we'll strike in mid-May. Essentially, you're going to get the lowest weekly close from May till November, and capture that sell in May into the Christmas rally period, where you're guaranteed the lowest settlement price from a weekly basis, and then you got 2.5 years beyond that, which is the end of Trump's term, which we all know he's going to try and prop the stock market up at any cost, you get to enjoy that ride out of that low. So that's the best way to play it at the moment. There's, it's derivatives based and options based. So you're getting around about 6-to-1 leverage on that as well. It's a really good product. Scan the code. It's quite popular. So scan that code, go and check it out. There's a video there explaining it. It's around about 10 minutes long. Got the documents and things, and you've got roughly just under a month until we strike. But we've got to get commitments in sort of, in that first week of May. And yeah, there's, it's a really good way to play it at the moment. So you feel invested. You don't make mistakes at highs here. You take advantage of any of these really highly reliable statistical dips, which is, that midterm election year one's been batting at 100% since 1940. That only comes up every 4 years, obviously. So yeah, look, I mean, at the moment, this is, I don't want to be trying to, sell things at record highs when, this is by far the smartest and most patient play that you can do. And then, you won't have to scratch that itch and get caught up in buying stuff in the highs. And if there is, if and when there's another dip. So, and kind of, it's a little bit more sleep at night. So yeah, look, Bulls versus Bears will be out this afternoon. Jonathan Takadina will be back with Kai Chen and myself. Hopefully we'll sort of start to talk a little bit more about, how we're playing this beyond this whole Hormuz situation a little bit, and a few interesting bits and pieces here and there. We'll try to keep it as low on the Trump, coverage as possible, because I think, I don't know, I speak on behalf of most people, that everyone's pretty sick of it in the end. So look, guys, do yourselves a favor and subscribe to that podcast, Spotify, YouTube, or Apple Podcasts. Other than that, guys, have a great weekend, and we will speak again Monday.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.